Well guys, it looks like I may have some good news. The market, as you can see here, may have finally bottomed. And as I'm recording this, it's up, over 2%? And we were talking about before, like on this day right here, the 20th, how we had this long wick rebound. And I was saying that's a really good sign. And sure enough, the market has pretty much turned around since then. And every time we've had that dip low, it's been reversed. Now we're going to talk more about this next week, maybe Tuesday, but probably Thursday because of the holiday. But keep in mind, even if this is the bottom, it may only be a temporary bottom because the final capitulation that we've been waiting for, it didn't necessarily happen yet. So what we could easily see is this type of action. We rebound up for a bit only to go even lower. Or this could be the double bottom that we've been waiting for. And remember, we're waiting for a few of those strong breadth thrusts to let us know that it's a secure bottom. Today might be one of those, but we need a couple of those in a row. So you could be cautiously optimistic here, but also keep your risk control in place because you do not want to get burned. These types of markets in these volatile sideways regimes, they really hurt everybody. And I'm sure you've experienced it this whole year. I know I have. But again, as always, as we wait for this market to truly bottom, we got work to do because we want to find those stocks that have been hit hard that we could ride on the way up, because a lot of stocks, they've fallen, 90%? And a lot of good stocks have been thrown out with many bad ones. So this gives us an opportunity to get into some of those good stocks because when the rebound happens, these are going to shoot up way faster than the rest of the market. And that's because they've been misvalued up until this point. So I got another one of those stocks for you today. And this company is actually a retailer. And I know what you're thinking, AK, a retailer, they've been getting smacked. Why would you get into one of those? Well, obviously I'm going to tell you in this video. But yeah, stores like Target, ouch, just dropping hard, or 30% down in a few days. Walmart down 20% in a few days. Even everyone's favorite Costco down over 30%. Oh, it's rough. I hope my beautiful sample ladies are okay. They still got my little mini sausages on those toothpicks. But the stock we're talking about today fits into that retailer category, but it has a few advantages that insulates it from what these other retailers are experiencing. Now, you're not going to see that in the stock price, especially right now, but that's the whole point, right? We're trying to find these misvalued opportunities. And the stock we're talking about is Five Below. And you can see as I'm recording this, it's up almost 12%. So if you were subscribed to Macro Ops, you would have known about this about a week ago. But don't worry, this thing still has a lot of room to run. That's why we're going to talk about it. So what is Five Below? Well, Five Below is a store that I absolutely hate. But that's okay that I hate it because it's not for me. And actually, the fact of how much it annoys me is probably good for the bull thesis. So let me show you. Five Below. It's a store full of junk. Everything is below $5. It's like a dollar store, but the difference is that it's catered towards teens and tweens. Yes, look at these tweens right here. Touching thighs. Gross. Leave some room for Jesus, please. But yes, Five Below is basically a dollar store. Well, it's actually below $5. So see, Five Below, you get it. Geared towards tweens and teens. So these kids can go into this store and buy a bunch of junk. Sounds really stupid, right? Especially to me, because I'm too old. But to these tweens and teens, it's an amazing experience. And a big thing to consider about this company is that it's the only one that caters to this demographic. So you can see they have 8 categories in each store. They have play, which is like a basketball, a volleyball, toys, I guess. They have tech. They have colored pencils, create. They got party decorations. They got trending stuff, new and now. They got stuff for your room. They have style, cheap t-shirts, and candy. Junk, just a bunch of junk, right? But kids love junk. So they have 9,000 square foot stores with 4,000 SKUs. That's a ton of products. So a normal shopper usually spends $150 there per year buying 60 items over 10 trips. So again, it's like a $5 store, right? So it's tons of items, tons of volume, very low prices. And since its IPO in 2012, the company has 10x'd its revenues while expanding its store count from 244 to 1,200 stores. Now, the first advantage of Five Below is that it targets that specific niche, those tweens and teens. I'm just going to say teens, okay? I'm tired of saying tweens. And their target market gives them an advantage over other stores like, say, Target or Dollar General. Because what do we know about Target? Target is for white women. Just like 20s and above white women. That's who I see going to Target constantly. So when these kids are going with their parents to Target, it doesn't feel like it's for them. It's for their mom to shop for whatever mom shop for in Target. And then on the other hand, we have Dollar General, which also doesn't feel like it's for these teens because it's kind of dreary scary in there, it's not fun. And you might find something in there, but most of the stuff is like geared towards people actually shopping for things that they need. So Five Below sits in between those two. I said tween again, in between. God. But it's actually a store where these teens want to visit, and it's like their store. It's not really meant for parents or anyone else. So in that sense, it's insulated from the competition, because a lot of these other stores might have some of the products that Five Below have, but they don't have as many of them, and they don't have such a wide variety. And the whole store, they lay out from the music to the open concept and all of that, it's geared towards specifically teens. And that's where a business can make a lot of money, right? Niching down, really focusing on your target customer. You don't try to go for everyone, you just try to go for a specific few. So a big thing that Five Below does is that they bet on things that are relevant right now. So they have 3 categories. They have craze and trends, so stuff that gets hot on TikTok. For example, like those little rubber bands where you take the rubber band off and it forms an animal. Like stupid things like that. That's what they're going after. And these things are blowing up on TikTok all the time, or when kids go to school, if their friends have them, they want them too. So that's a huge part of what they offer. And then they also have licensed brands like Disney and Marvel and Reese's with the candy. Even candy goes on boom and bust trends. It's weird. Kids are weird. And of course, they have generally relevant stuff. So customers love Five because it offers that treasure hunt experience. You get a bunch of cultural and societal items that all your friends have. You gotta be staying up with those trends. Gotta have those rubber bands that turn into animals. But also you'll find stuff that's about to be hot too. And a benefit that Five has is that they're able to command lower prices from their vendors because their vendor knows that these kids are gonna buy these items. They're not just side items in the store, they're the full store. Another big advantage of Five Below is the unit economics of each store. So each one costs around $350K to build. And new stores generate $550,000 in EBITDA at 25% margins within their first year. So that means if you open up a new Five store, it'll generate 150% return on your invested capital. And that gives you a payback period of less than 1 year. So you put money in and you get it back out real quick, and then it's profit from there. And the smaller that feedback loop is, the more attractive that store is, or that business. And Five has a very small feedback loop. So each store generates so much profit quickly that Five can open more stores with greater frequency than its competition, without tapping the financial markets for assistance. So that gives them a lot of maneuverability because they're able to build so fast, and they don't have to take on a bunch of debt to do it. Now, another secret to Five's success is how good they are with real estate. They got a real great real estate team, because what they do is they put their stores right next to where mom would shop, because these teens can't drive yet. They're still going with their parents. So you'll see these Five Below stores next to Target or Walmart or the grocery store. So the idea is that the kid has to go with the parent, but the reward is that they get to stop at the Five Below store real quick. And you can see right here how the store is laid out. It's pretty unique compared to the other stores, and it's very much for kids. This hurts my eyes looking at it. So much junk. They even have things like a dribble area where you could just play with balls. And by balls, I mean basketballs and footballs and other items that you can dribble. Now, another huge advantage of Five Below, and the most obvious one, is that all their products are super cheap. Now, here's the thing about cheap products. They are gonna break really easy. Like, they are not durable. They're there for a few weeks and then the kid probably loses them anyway. But that's not the point. It's the experience. It's fitting in with your friends. It's society. It's about teaching kids consumerism young. But the low prices work because a teen has an allowance or like a low paying job, they can go into the store and buy actually multiple things because they're so cheap. And even parents, if their kid has been good or whatever, they could run into this store and spend a very low amount of money and get a lot of stuff. So parental reviews actually show that parents enter the store expecting to buy 1 or 2 things, but they end up leaving with 5 or 7 because they're so cheap. And there's another benefit from having these super cheap products. Companies like Amazon and online retailers, and yeah, that's mostly Amazon, they can't really compete with you because these unit economics are so small, as in you're selling things for $2, $3, $4. The shipping costs don't make sense on it. The cost of shipping is going to be more than the product itself. So Amazon isn't going to make money on those products. It makes a lot more sense for people to be in the store and buy them. So really the idea is that it's a store full of junk made for teens. It sounds terrible, right? But it's a great business. Like we said, the company has 10x revenue since 2012, and the store count has been growing like crazy. And the growth isn't stopping, it's only accelerating. As of 2021, they have 1,200 stores. They probably have more than that now. But management thinks they can reach 3,500 stores by 2025. And the more stores that you have, the more economies of scale that you get. Like lower per unit SG&A spend, which is just like general office administration at corporate, right? The same guy can manage 100 stores over just 50, and it's the same price because we don't pay pay our people anymore. You get greater leverage on vendor pricing because you're buying more products. You get reduced logistics costs because you're going to have more distribution centers. So the more they can scale, the better off they're going to be. And the better their logistics become, the better they're going to be at jumping on these trends. It's almost like fast fashion for junk. And again, I absolutely hate this store. And you know why? It's because I was raised by my Indian mom who absolutely hates junk. Even stuff that's not junk that's mine, she loves to throw it away. My earliest memory of a birthday involved me getting too many toys, according to my mom. So I got to go with her to the store to return half of them. Devastating. Is it my fault that I got 2 Megazords? I got the one Megazord with all the Power Rangers, all their little things come together, right? With the guy that stands. And then I got the White Ranger's Tiger Megazord, which was awesome too. I had to pick between them. I picked the White Tiger thing. But do you think a lady like that who returns half their kids' toys was gonna let me into a store like Five Below? Of course not. Which is the same reason I wouldn't let my kids in that store. It's the same reason I hate that store. It's generational trauma and I'm gonna keep the cycle going. I'm not gonna break it. I will happily throw all my kids' stuff away. But that's why this store isn't for me. But it's not supposed to be for me. And a lot of times the companies that I hate, they end up doing the best. It's almost a good signal because you can't let your biases influence what's happening. This garbage is a good business because we're American and we love buying junk. And by the way, this Five Below stock really fits into our milkshake framework too. If you're wondering what our milkshake framework is, then click this video right here. It's a great discussion, very interesting. It will absolutely help you out with your investment process. So click this video right here and I will see you there.